Here we are going to see the limited companies or joint stock companies. And from the joint stock companies, limited companies, next we are going to see private limited companies. First we will go what is limited companies. We can see according to the ownership structure, we can say this limited company or private limited company are the private sector business organization, or the limited companies are private sector business organizations. First we are going to see what is limited company. Limited companies are a business where a number of shareholders or the owners contribute resources to a common business and share the profit and losses. The profit and loss also will be shared among the shareholders, and the group of people, they are called shareholders, will contribute their resources for a common purpose, business purpose. And next we can see formed on the basis of an agreement. These limited companies are formed or established on the basis of an agreement. These agreements are called Articles of Association and Memorandum of Association. These two Memorandum of Association. These two are the agreements required to form a limited company. And there are two types of limited companies. There are two types of limited companies. They are private limited companies and public limited companies. That's what we are going to discuss. First we are going to see what is private limited companies. See, usually held by families, friends and relatives. That's the most important point about the private limited company. Its owners will be family members or friends, known people always. And they will issue shares or stocks. These private limited companies also will issue shares to the shareholders. And you see the point, shares or the stocks are not traded in the stock exchange for general public. That's the most important point about the private limited company. They will issue shares, but their shares are not traded on the stock exchange. Then where they'll trade, we'll see. They'll trade their shares among the shareholders, among the owners, the existing owners, or if they want to sell the shares, they need the consent. They need consent or permission of shareholders to sell the shares to others. So they are not traded on the stock exchange. If they want to transfer the share to somebody else, they have to get a permission from other shareholders, other members. That's the thing. We will see the advantages. Private limited companies, advantages. A limited liability. That is one of the advantages of this private limited companies. That means they will not lose their personal properties at the time of bankruptcy. That is called a limited liability. They lose only the investments they made in the business. Next, continuity of existence. This private limited companies also will continue even if the partner dies or retires. In such a case also the company will continue. It will not stop. Next one is scope for expansion. This company also has scope for expansion because they can sell the shares, or the shareholders, more shareholders are there compared to sole trader and partnership. So they can gather more capital and expand. See the disadvantages. Start with here. The growth of private limited companies are limited as the maximum shareholders allowed are 50. Even though their share can be sold among the shareholders and can collect more capital by shares, but the number of shareholders are limited to 50. Maximum number of shareholders a private limited company can have is 50. So this is one of the disadvantages. They will have limitations to collect more capital, and shares are not allowed to transfer freely without the permission of the shareholders. That is one of the disadvantages. We have seen that one. If any shareholder want to transfer or sell the share, he needs the permission from other members of this company. Thank you.